These are the 3 Canadian stocks to help you buy food here in Canada. So let's go. For context, I know it's been tough for Canadians, especially with this tariff war business and just news happening every single day, like a new prime minister, ongoing tensions between the United States and Canada, as well as other countries, and just overall inflationary times. It's very hard to afford the everyday necessities such as groceries, etc., and so on and so forth. And as a food channel, I know people want to go eat out and try these places, but we're in like a economical time where it's very expensive to do so. So with that being said, I hope I can share these sort of non-financial tips. This is not financial advice, by the way. This is just recommendations, and please do your own individual due diligence and practices in order to figure out the best personal finance decision for your situation and to not make rash decisions. This is not something I condone, but these are just recommendations and some strategies that I've been doing to combat sort of with inflation and, navigate my way through these tough times effectively. So with that being said, these are 3 stocks that can help you quite a bit. They'll be able to help you, instead of keep money in cash, grow it inside asset classes and allow you to have more comforts in your back end at the end of the day, so you can afford many of the necessities such as groceries every single week and eating out, because that's what life is sort of about, right? You want to have fun with the people around you, and in order to do that, a lot of the times you have to eat out. I mean, you don't have to, but eating out definitely is fun for many and fun for myself for sure. So using these stock strategies, you'll be able to do that with ease of mind and you'll be on your way for sure. So starting off here, we have VFE, which is the Vanguard S&P 500 Index ETF. And to preface, everything's going to be on the Toronto Stock Exchange. This is a Canadian channel for the most part. I'm not going to be talking about American stocks because as Canadians, we currently hold the Canadian peso. Let me just even search it for y'all right now. Let's see here. At the recording of March 20th, 2025, we are currently at $1.43 Canadian dollars per $1 US. So our peso isn't really bringing us to the place that we necessarily want it to bring us to, but it is what it is, and you have to combat our low dollar in a variety of different ways. That obviously being Vanguard S&P 500 Index Fund. So essentially what it is a index fund, a basket of different companies, to be specific 500 that are wrapped together. As you can see on the max track, you're never going to make a lot of money. I think the average return is typically 8% per year, but that's not guaranteed. Again, this is not financial advice, but this is a strategy that I use to combat with inflation, and historically it has been working for me quite effectively. Even from a 6-month point of view, it's been on the low and then sort of the high at 155. That was good times, and then because of the tariff war situations, gone down to 141, the 140s, which I'm very okay with. I've been buying the tip very consistently for a while now. But yeah, let's just go on to the Vanguard website. There is a small management fee of 0.09%. When you have index funds, there tend to be kind of a management fee because having it exist in the first place is costly, and then there's a price to pay for that, and therefore the management fee is produced. But 0.09% isn't a very expensive amount in hindsight to other S&P 500 index funds, but I personally think as a Canadian, this is probably the most cheapest and most effective 8% gain you'll probably presumably make. It's not guaranteed that you'll always get 8%, but and it's probably the safest bet to do. And especially in times like this where Canadian dollar isn't as strong, you want to bet on sort of the stronger market, which is the US market. Get your 8% up, and a lot of the companies in the S&P 500 are like Apple, Nvidia, and so on and so forth. So you're probably going to want to trust those companies because they're most likely going to perform quite well. But anyways, yeah, I think there's like in a 12-month yield, there's 0.97%. So you do get a dividend yield, which is basically you own the S&P 500. They pay you quarterly dividend payments just for owning the stock, and then I typically get a bit of money and I put it right back into the market again. It's really effective, and it's just free money that's just given to you for owning the stock. It's quite nice. But yeah, I'm not too much of a stock expert here, but I do follow these strategies and it's been working for me as I've been investing since 2020. It's been a very effective strategy for me. Here we go. So this is the part that I want to show everyone. Essentially, VFE buys VOO, which is the American version of VFE, which is the S&P 500 index fund stock in the New York Stock Exchange. That is VOO, and essentially VOO buys, obviously the 500 S&P 500 index fund stocks, but they do hold kind of these so on and so forth, big, huge blue chip stock companies or FANG companies or whatever they're called nowadays. But they do have Apple, Nvidia, Microsoft, Amazon, Meta. This is Google, by the way, Berkshire Hathaway, Buffett, the GOAT, and then Broadcom. I'm actually not sure what that is, but Alphabet, which is also Google as well, and then Tesla. Yeah, for sure. Like just because I've been meddling with stocks for quite a while now, I do have ownership of Amazon, don't have Meta. I do have Apple individually. I do have Tesla, and I do have Google. I missed the Meta train, which kind of sucked, but it's okay. And kind of like iffy on Nvidia, because the way I see it is like, rather than taking the risk, there's possibility of never getting, the gains for sure. You can just put your money into an S&P 500 index fund, and then that way you'll be able to get almost guaranteed 8% gains, and then that's just much better because your losses from taking riskier investments may not outweigh the cost of just getting your flat out 8% per year. A lot of people can't beat the index, so if you can't beat them, just join the S&P 500 and just simply invest, and then you'll probably be in a better position, because a lot of these finance YouTubers and such do these risky plays, but they don't always necessarily come out on top. Rather, you could just invest to an S&P 500 index fund and you will get the inevitable gains. Not guaranteed for sure, not financial advice, but it's highly likely that you'll do well. Point being is, S&P 500 index fund VFE is goated, and I highly do recommend it if you're getting into the investing game. This 8% gain can allow you to have the cushion that you need, extra income, dividend income, 8% gain, for you to navigate your way through life a lot more effectively and easily, having it in an asset rather than in liability. And you can go on your way to going to your favorite restaurant knowing that you're going to have money in the bank because you made the right proper financial decisions. But again, not financial advice. I know a lot of you guys are thinking as well, oh, but what if I don't want to invest into American companies because of the current situations that we're in right now? What if I want to invest in more of an international strategy? I want to invest in all emerging markets, and I don't want to just put my money in solely US, because maybe in the future it's not the leading currency. Maybe China will be, but point being is, I want some more international exposure. What do I do, Dominic? Well, the next stock I would recommend is XEQT, which is iShare Core Equity ETF Portfolio. Essentially what it is although it does hold US stocks and Canadian stocks, it does hold international stocks as well, which is why I like to dabble a little bit into it. It does provide a dividend as well, so let's go sort of dive into that and take a look right now. Okay, so at the point in time, it's 34.13, and actually let's take a look at the chart here. You can kind of sort of see it right here a little bit, but yes, I do know the gains are quite slow, and it's arguably only like within 3 to 5%, but at the same time, you never know. If the leading currency switches from the United States to China, it's yuan. So if that ever happens, then you'll be prepared for the international exposure, and this account actually might do better than you think. If you diversify your money into an international index fund, you might be in the front head of the seats and you don't even know it. So I like to have just kind of a little bit of diversification in the case that some sort of shift does inevitably happen, right? Let's take a look here. To preference, looks like there's about a 3.21% yield, which is quite nice actually. Oh, there's even drip options as well. Drip is essentially when you get a dividend yield, in this case XEQT, and then once you get that quarterly payment, you can have the option to drip it back into XEQT and fractionally invest into XEQT. So you're basically getting the yield, getting your money from owning the asset stock and getting it back into the asset stock by doing a fractional investment. Some people say it's a good idea, but I like to just get my dividends manually and then manually invest it to wherever I want it to go, just because I may not want it in XQT, I may want it in VFB. It just depends on the certain circumstances and the day. But point being is, yeah, it's not a bad dividend at all. I actually want to show the management fee, so hopefully we can find that. There you go. So yes, although it is a bit more expensive, there's a management fee of 0.18% and a MER of 20%. I barely notice it when I'm investing into XEQT, but yes, you could bear this in mind when you're picking between VFE or XEQT. I like to just have maybe a smaller investment amount into XEQT, just simply because it kind of gives you that diversification option. I have a lot of my money in VFE, like, to be frank, not financial advice, but I think having XEQT is not a bad play either. So essentially, XEQT is currently holding all of these different, it looks like ETFs. So there's the XUS, I guess, which is the S&P 500 index fund, but this is for iShares. And there's a variety of different other stocks that currently hold too as well. So as you can see, emerging market, that's very effective if you want to invest sort of internationally, but they also do have total US stock market. So that's like all of the US stock market, and it looks like TSX. So it has Canadian shares and stocks too as well. It's very well diversified, and they even have a cash cash position in terms of safety. But yeah, oh, here you go. Here's the country per country diversification and allocated amounts in this index fund. So obviously the vast majority, it seems like it's Canada and the States, but it does have Chinese stocks. Looks like Australian and Japanese. Oh, well, there's no Korean, but France, Germany, and UK. Oh, Netherlands too as well. It's actually here. But anyways, again, this is a great plan B. I started investing like weekly, because I do dollar cost average methods into VFE every single week. I've been buying a lot more because of the dip lately, but point being is, if you just buy it once a week, it's great. And you can rest in mind knowing that if there's a dip that happens, you can just buy the dip again because you are just dollar cost averaging. It's a lot easier than buying lump sum. Although lump sum benefits you a lot more, I think dollar cost averaging is mentally a lot better, so I prefer to do that. It's just less stressful. But anyways, if you also are dollar cost averaging, XEQT is an awesome alternative. And as you can see, the chart just doesn't even go down. Like, let's take a look at the max here. Like, sure, this is the 2020 dip, but it just wasn't that drastic, and it looks like it's a relatively new index fund. You know, thick in and thin out, it just continuously goes up. So you really puts your money in a good place, and it just performs to the best of its abilities. So again, yeah, I would recommend VFE, XEQT, and let's go on to the last stock, which is IBIT. With IBIT, you're going to be getting a little bit of exposure to the cryptocurrency Bitcoin, and I know a lot of people have skepticism over it. And if you buy just pure Bitcoin, there are tax implications. I think you get taxed 50%, and that 50% goes into your income taxes. When you're submitting that, it's quite a costly cost just to own Bitcoin, whatever you sell. So rather than doing that, you can go on your different types of accounts. So RSP, TFSA, and your FHSA. You can sort of buy IBIT, and you have equal Bitcoin exposure without the tax implications. And you can do things tax-free. So if you want to get Bitcoin exposure, I would highly recommend it. So let's just hop into it right now. Under IBIT, it's currently at 35.73, and it's just a really new stock in general. The lowest is 33, and then the highest is 45. We've been under a lot of complicated times right now because of the tariff situation. But I think if you're up for it, not financial advice, Bitcoin has inevitably always performed. It has like a cycle. It does sort of really terribly, and then it goes back to a really good number. But at the end of the day, it sort of like rises up. I'm gonna sort of show you right now. And I like to sort of measure Bitcoin in USD, so let's check it out. So if you look at the max projection of Bitcoin, although yes, it seems extremely volatile and very scary, I think if you just park your money into Bitcoin, what I do is like invest $20, $50, like $30, 15, 10, like every single week. Like money you're okay with losing, you will just come out on top. And if you're investing money you're willing to lose, it just doesn't matter anyways. I started with about 100 in Bitcoin and a bit in Ethereum, and over time it just got inevitably better. And yeah, at the end of the day, if you just hold on and you keep strong, you will just get on top. At one point it was over 100k USD, and it's obviously back down to 84, but it will go back up at the end of the day. If you're willing to take the risks and you don't want the tax implications and you're Canadian, I recommend iShares Bitcoin ETF. And I simply recommend this because there's one specific reason. It has a management fee of 0.32%, and from my understanding, it's probably the cheapest management fee out there at this time, which is a huge reason as to why I picked IBIT iShares. This is the Canadian version, so I think it's like ibit.ne. But point being is there's FTBC too, stuff like that, Fidelity, but the management fees were a bit more expensive, so I didn't want to fly that route. So I decided this would be the best. I think iShares ibit.ne just buys IBIT's USD and Canadian currency, which is pretty straightforward and simple. It just tracks Bitcoin and its price. Like, although you're not going to experience the most safest and comfortable feeling, I think exposure in Bitcoin's really amazing because it is like a decentralized cryptocurrency, not governed by any government, and all of the transactions are recorded on the blockchain. That's all I know, but it's a really great way to diversify your money, and it's sort of just a money printer in your bank account eventually, because it started with a very few amount, and if you simply hold on long term for a long time, you will get rewarded for it. And if you're kind of on edge about the tax implications in regards to it, you can always I buy IBITs once a week via my TFSA, and it's been working out pretty well for me. I'm sure I'm gonna jump out of this slump real soon, and I'm just gonna continue to buy it once a week, dollar cost average, simple as that. And I think having more of a riskier investment but not being that risky is like quite nice for your portfolio, and it will help you in the long run. So in terms of grocery shopping and food expenses and dining out, these stocks will help you long term in order for you to have that comfort in the back of your head and to say, oh, okay, so I'm having this amount of money in my brokerage accounts. It doesn't seem like it's too bad for me at this time. I'll be able to afford comfortably to eat out, and I think the comfort and not having the anxiety over it is priceless, and knowing that you have sort of the money in the bank to flow through the waves is nice. So I think I recommend investing into VFV, XEQT, and iShares Bitcoin ETF IBIT, but for Canadians it's IBIT.NE, and just riding any wave that comes through, dollar cost averaging every single week. You just go from there, and trust me, like 5, 10 years, 20 years with compound interest. Compound interest is the eighth wonder of the world, so you just continue to buy, and you will see the results very nicely and fruitfully. So yeah, I guess that's about it. This way you'll be able to probably dine out in comfort, because that's what we all want, to not have to have financial burden. So I hope you guys enjoyed this video. Be sure to leave a like, comment, and subscribe, and peace out.